Okay, okay. And
Normally,
yeah.
to optimize the presentation, we keep our videos off, but the presenter's video will be on all the time.
Okay, okay. So that there is no disturbance. Okay.
Yes, yes. And all the participants are also kept on mute.
Okay, okay,
But they can put a question on chat.
okay,
And
okay.
then there is a question answer segment as well. And
Okay.
you will have access to, you can see those chat questions, but normally some of us will moderate also.
Okay, okay. So
And it is up to you whether you want to take the questions in between or we keep the question answer sessions towards the end.
I think we'll keep it towards the end unless it's
Okay.
completely linked to what we are doing.
That's fine with us. That's fine with us.
And I'll get all
Yeah.
the list, or should I keep noting down the questions?
Somebody will ask the questions. Some moderator will put up 3 or 4 questions towards the end, depending on the time that we have. So you don't have to worry about that. You can just focus on your presentation.
Okay, okay.
Right now, it has not yet gone, online. So I'm having this discussion with you.
Okay. So, and the other thing was the should I start with the share content so that my PPT is visible?
Uh, yes, you can share. You can start with that also.
Okay. So I don't know how it will be visible now.
Amit sir, you can make ma'am the presenter. Then only ma'am will be able to share it.
Done.
Okay. Great.
Okay.
Ma'am, now you are the presenter. Now you can share.
So, okay, I tried to share it earlier. Okay. So this is the button. So this is open system preferences. That is the one, na? The third button, na?
Third one. Share content.
Okay. It's just share content, yeah. So,
Then it will give you 2-3 options.
okay. Let me see where. Just take. So this is on my desktop. So it doesn't say desktop. How will I share? It doesn't say desktop. What will it say, Nina?
It may say that share screen.
Share
So,
screen.
so maybe if it is open there,
Yeah, it is open there.
there will be an application window also on that. There will be a link for that application.
So I can't see that. Maybe just let me take a little help. So I'm just not able to share the screen. That is so. Let me just take a little help. One second.
Amit, although it will go live, but at the same time, because it is already available, so on cloud, let it get recorded.
Recording started.
I want to share my.
Thank you.
How do I share my? Either this was the third one.
You can switch off your video and get all the arrangements. But no, don't do that because then it will not share the screen.
How do I share? Nina, that option is not coming.
Amit, madam is the presenter now.
Madam is already presenter.
Yeah, it's coming now.
It's coming.
It's done.
Okay.
Done. Okay.
Yeah, now it is done. Wait. So, sharing your screen. So, I want to just make sure you can see my presentation. Can you see the presentation?
Yes, ma'am, it's visible now.
Visible now? It's okay. So, no, wait, no.
So I will invite Professor Dupti now to introduce Madam.
Second.
Morning, ma'am.
Good morning. So, one second, is this size okay or should I?
Yes,
Perfect.
Huh?
perfect. It is perfect.
Okay. Thank you.
A very good morning to all of you and welcome to the third day of eFDP on global economy in COVID-19 opportunities and challenges. I welcome today's session expert, Professor Madhu Vij. She is a professor of finance at Faculty of Management Studies, University of Delhi. She has been teaching for over 3 decades. Her professional and teaching interests include the areas of international finance, risk management, banking and financial services, corporate finance, and accounting. She has received the Alumni Excellence Award from prestigious Shri Ram College of Commerce, University of Delhi. Professor Vij has participated and attended the Global Colloquium on Participant-Centered Learning at Harvard Business School, Boston, USA. Professor Vij was on the panel of judges for award of PM's Trophy for selecting the best steel plant for 2 years, 2011 to 2013, and has also been a member of ad hoc task force results framework document from 2011 to 2013. Currently, she's an independent director for 4 private limited companies. She's also a trained NBA and NAC assessor. Has completed a number of projects sanctioned by national bodies like UGC, RBI, ICSSR, SAIL, and Delhi University, to name a few. She serves on the editorial board and is also a reviewer for several academic journals, national and international conferences. Ma'am would be discussing on the topic leading through COVID corporate response in banking sector. I welcome you, ma'am.
Thank you, Deepthi. You always make me nervous with the, the CV or the small brief profile when we read out. But thank you so much for the very kind words, Deepthi. So can I start the session now?
Yes, ma'am.
Okay. So good morning to all of you and a very, very warm welcome. And let me also thank and in fact even congratulate IP University for this very timely kind of seminar which you are having, through e-resources. And I'm sure the kind of learning and the kind of response you have got, has been overwhelming. So I'm sure the participants and the panelists both would really learn a lot through their experiences and the sharing which happens through this session. Now, when we say leading through COVID, corporate response, I think let me first start with the corporate response in general. Now, the corporate response in general, is a scenario, which sometimes takes us back to the world wars. And at least during the World War, we knew who our enemy was. But in the present scenario, we are fighting a battle without really not knowing who our enemy is. Now, that is the challenge. And even before, we try to delve a little more deeply into, what should be the response of the banking sector, what has been their experience in the last 2 months. Let us understand that this is a very unusual problem. And this unusual problem may have a solution or may not have a solution. In fact, the important thing in the present scenario is that this is a scenario where humans are involved. And when there is human life involved, our first reaction is, how do we save the human life? So everything else becomes second. With this backdrop, let us dwell a little deeper into the kind of crisis we are in and what could be some of, I would say the way forward. So not really a solution. These could be just some scenarios we could discuss, which would help us in charting out a role for the way forward. Uh, this pandemic has taken us all by surprise. In fact, let me really honestly tell you, when, I would teach a paper in FM and we would talk about, the crisis of 1930s, and we would say it was the global depression and what all happened, one had read a lot, but it was more like a book reading. But having gone through this experience yourself now, I think the responses which come are completely going to be different. And I think, it's more like our heart and soul is involved in whether we are listing out the problem or whether we are listing out the solution. So, the important question to ask is, what we need to do in this crisis, and accordingly, what not to do in this crisis. And then, what should be the mantra for the corporates? Now, what to do in the crisis is take care of yourself. What not to do in the crisis is, there are a lot of do's and don'ts, but it's not so simple when it comes to the corporate sector. And the important thing, which, let me highlight one important issue here, and that in the present crisis would be the role of leadership. In fact, I was reading on LinkedIn a comment by the CEO of Genpact, and his comment aptly summarizes our thoughts here. And what he says is, leadership through COVID is a moment that will not be forgotten for a very long time. So, how we respond, how our leaders behave, how a corporate behaves, how a company behaves, in terms of what are their reactions, what are their proposed solutions. This is something which, a lot of us would carry with us for a very long time. The other issue which I would like to flag off, even before we specifically, as I said, go to the banking sector, would be to understand that one part here is the role of leadership, and the other is how different sectors would respond. So the leadership response will also not be the same. It is how different sectors respond to this crisis and how they adapt to the crisis, is also going to be different. It's something like to each his own. And, it's important to understand, and all of us have been reading a lot of news in this context, is that some sectors have been unduly very hardly hit, and some sectors have not felt the impact in such a severe manner. Having said that, let me also say, all of us are feeling the impact. It's only a question of more and less. So if you talk of a sector like the hospitality sector, the airlines, now completely, they are feeling the impact at a very, very high scale. And if we talk of some sectors like the telecom, or let's say a lot of technology-enabled companies, they are a little more prepared. And one important learning, when we look at the kind of, the kind of impact it has had on various sectors, is that, technology, innovation, and digitization will only help us move forward. So it's not something that, the question will be, do we or do we not adopt digitization? No, it's something which is going to become, a normal part of our activity. There's another thought and there's another word which we have been, hearing very often in the present context. Everybody says this is going to be the new normal. Again, the issue is, what is the new normal? How would the disruption, the present disruption, which is the pandemic disruption, which is not like a business disruption, which will help us to prepare for the new normal? Now, the new normal, I would say the definition is really difficult. In fact, even if I were to draw a norm as to what will be the new normal, it's not going to be easy. But yes, what we can definitely say here with a lot of confidence is that the new normal is going to be a bumpy ride for all the sectors. And the second part is that the new normal will not be a straight line. So the new normal which comes up will, accordingly be different for each sector. Let me also emphasize or maybe touch upon, a concept which for the last few years we have been talking, we have been reading, and we have been doing a lot of research on. And, the concept is on design thinking. Now, there was a time when we said, no, 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 design thinking is only for production. It's only for supply chain. No. Design thinking is a concept which applies to all corporates, to all organizations. And simply put, it simply means, how do you do things differently? Now, how do you think differently? So if I take the example of the banking sector, it's a completely service oriented. It's a completely customer oriented. So how do I do things differently which add value to my business, which improve customer experience, or I do the same work with a very high speed? So if I'm thinking about, let's say, sanctioning a loan, how do I cut down on the number of days? How do I cut down on the various regulatory dimensions? Now, these are, aspects which we need to think into. So, design thinking is something which we will need to incorporate as a part of our regular thinking. So, it's not even really something which we often use the phrase out of the box thinking. No, it's not really out of the box. It's something which should be a normal part of my activity. And design thinking doesn't mean that I'm going to do things in a complicated way. No, keep it simple. And that is another mantra which, corporates will need to understand after the present scenario, that whatever technology can do, whatever digitization can do, whatever else, our artificial intelligence or Internet of Things or big data or whatever were the fancy words we were using, but the baseline would be, how do I keep everything simple? Now, let's move on a little more specifically to the banking sector. If I were to summarize, and I always would summarize maybe in 3 words, if you read the first 3 words written on the screen. So, for a lot of lectures which we used to do, and we used to say, oh, how has the banking sector changed in the last 20 years, in fact, 30 years now, in fact, after liberalization and globalization, how has the banking sector undergone change? We could summarize the change in 3 words. So we would say we have had armchair bankers, lazy bankers, and crazy bankers. in a very, very summarized form, an armchair banker was, the time we observed wherein, the banking hours would be 10 to 2, and there was a typical kind of, a laid back kind of an attitude where, the banker would do only specific jobs, and you ask for maybe a draft or some other routine work, it gets n number of days to be completed. That gave way to the lazy banker. And even the lazy banker would be sometime in, let's say, the 1990s when we started this whole phase of liberalization. But if you see the way bankers are today, it's a crazy scenario. And the crazy scenario is because a bank or a banker is doing all the jobs under the sun. He's doing, a loan, he's doing the normal banking operation, he's doing all other features which a banker would do. Now, after COVID, if you ask me what is the role of a banker, I would say he's super crazy because he has to be somebody like a Superman to be achieving the kind of impossible tasks we are given. In fact, there was a very interesting YouTube video, wherein they were interviewing a lot of CEOs from the bank. And it was not necessarily, in India, it was across the globe. And each one of them was also emphasizing, the use of multiple cutting edge technology. And the other thing which was emphasized for the bankers in the present scenario was to stress test various scenarios. And they said that you will need to think of how to make the whole process a little more friendly and a little more simple for the customers. Here, let me also mention about when I was mentioning about this YouTube aspect, wherein it was asked to the CEOs, and the question was, what will be your top priority after COVID? Let me just help you understand a few important responses which were given. So they said, workplace flexibility. Digital will no longer be a hobby, and this is something which I emphasized when I started off with the lecture, but will be absolutely essential, and about the Internet of Things. And they say, in fact, there was a lot of discussion about how the banks will adopt to the crisis. And, a lot of CEOs said we need to really wonder whether the crisis will be U-shaped or V-shaped. If it is U-shaped, what will be our responses? If it is V-shaped, our responses will be a little more easy because, okay, we bottom out and then we start the path to the recovery. So the important thing here is that, we are still trying to understand where we are. Now, in this context, what would be our advice to the banks? The advice to the banks would be anytime, anywhere banking, increased role of technology, and as I said, the role of digitization will become more pronounced. And, and this is again going to be something which is, which is going to be something which is going to be, I would say, very important for banks to survive. We need to create contingency plans for disruptions. So after the global financial crisis, I would say, of 2010, there was a word which was being used which said, for the financial services sectors, innovate or perish. Now, let me add, you create contingency plans for disruptions and see what would be your plan and what would be the course of action after the disruption. Let me say to little sum up what we have just said. It's important for banks. So now I've specifically moved on to the response to the banking sector. So what do the banks need to do and what should be the responses? So the the remaining flow of the lecture would be completely focused on the banking sector. But when you say banking sector, a lot of financial institutions, a lot of financial services, everything comes under this ambit. Now, the crisis and the present crisis uh, will be an important opportunity for banks to understand that they understand their customers and they are wanting to help them. So, as like one of the CEOs was mentioning, how do you create that trust of the customers? How do you create that confidence of the customers? A simple thing like, they said, we don't want you to come to the banks. Okay, if you don't want us to come to the bank, don't want you to come, you don't want us to come and withdraw money, then the ATMs always need to be sufficiently stocked. So this is something which a lot of bankers are taking care. ATMs need to be, completely stocked with cash. So whatever, even I have said, and whatever is the kind of importance of digitization, we have been using a credit card, we have been using other pay channels, but cash will always remain the king. And remember, this is a famous line for the banking sector, which we always use, which is all the more becoming important. But yes, the trust-based relationship with customers is something which will carry the banking sector to the next level, to the next height. Now, like some of you would say, why are we doing it specifically for the banking sector? Yes, all the other sectors have been they have been impacted to the same extent. But remember, the banking sector is the backbone of our economy. And as we would, proceed with this background assumption that the banking sector is the backbone on which the entire sector rests, all the other industries rest. And that is why it is important to understand that, we have to ensure, we have to make an attempt that the banks do not collapse. And I think that is something which is at the bottom line of all our planning. So, when the RBI gives a lot of regulatory, in fact, as of now, RBI has given a lot of relaxation, which we will talk also about later. But these relaxations are a complete must for us to ensure that the banking sector remains sound. It's also important to understand in this context that the banking sector had been going through a lot of strains in the last few years, with a lot of non-performing assets, with a lot of stressed assets, with a lot of bad loans. So as it is, the central bank and, the other policymakers were thinking of how to revive the banking sector with a lot of, banks also facing a lot of issues. And with the COVID, the whole problem has only got compounded. So now here, there are some specific solutions which are being proposed. Now, all of them, I'm also emphasizing, they are being proposed. And the bottom line for all these solutions is that, we need a solution to our bad loans. And the important questions, the important question, if you look at the perspective from the banking sector, is the line which you could read from the screen, which says, it's not a question of restart, but reset. So, what are we going to do? You are going to reset. Now, reset would simply mean regain confidence, build customer relationships. In fact, you need to understand how do we ensure that banks on whom, basically they are the fulcrum on which the entire economy rests. So how do you ensure that that fulcrum remains sound? It's also important to mention here the role of the boards. The board of each bank plays an important role, and events in the last few months have told us, have re-emphasized that it is very important for a lot of best practices to be built into the whole structure of the banking, of the banking structure, and the kind of importance the boards play, right from the audit committee to the remuneration committee to the the stakeholder committee, and now the risk management committee. In fact, after the subprime crisis, and again, I'm going to talk a little about this later, the banking structure in any case had changed. But remember, we were still struggling with how to, what should be the preconditions for a risk management. And that is where the boards were playing an important role. But now, the whole, I would say, the whole scenario analysis would need to be rethought, reset. And that is where I would say the word reset holds a lot of importance. Let me also mention here, there should be a few takeaways from this session. One important takeaway which I started off with was this whole concept of design thinking. How design thinking will come to play. The other important concept of the other takeaway here from the lecture would be the reset. And then the banks would need to understand how to, what would be the guidelines for this reset, how to look at, the whole reset perspective. In fact, let me also tell you here that, in fact, if you read a lot of articles, and let me also say the consulting firms, right, from an Accenture or a Deloitte or a McKinsey or an EY, they've all been working on what should be the, the preconditions or requirements after COVID-19. In fact, when you read a lot of these reports, I found all of them were emphasizing this part which says there has to be a shift from business continuity to crisis management. I hope you'll all remember that in the last few years, there was this whole focus on business continuity plan. So they said it's not only a large organization who needs to think of a BCP, but also all small level organizations. But now they say, please shift your focus for at least some time from business continuity to crisis management. These were some of the skills which were, emphasized, and they talk of an adaptability and the flexibility. Then they talk of being technology savvy, creativity and innovation, critical thinking, digital and coding skills, leadership skills, and emotional intelligence. I'm not saying this list is exhaustive, but yes, it does, give us a little, I would say, a brief idea of, the whole arena of where our focus should be. I'm sure we would have all read, and this is a cause of concern, that the rating agency Moodys had revised the outlook for the Indian banking sector to negative from stable. And the reasons they said were the disruptions in economic activity. Not to be too worried of, but yes, to be taken note of. Because even though the entire world is going through the present crisis, but yes, we have to look at our economy. We have to see how we, take care of the economy, how we revive the economy. Let me here just mention about, a few years back, about 3-4 years back, Moody had given a Baa2, Baa3 rating to our banks. When when our honorable Prime Minister's government had taken over. In fact, I still remember at that time when Moodys gave a Baa3 ranking to the Indian banks, which was just a level above junk. There was a concern all over. They said, why? So Moody says, no, the condition of the NPA is critical. And then the government went backward and forward, and then, after a year or so, the rating was revised to be AA2. It's important to understand here that a rating plays an important, a role for the entire economy, more so for the banking sector. Because if you have a rating of, let's say, a Baa3, and you let's say go and sell the bonds, or you want to raise funds, or you want to borrow, you might get, the rate of interest would be very high. In fact, it is said that if your rating is stable, there is at least a difference of 3 to 4% in the rate of interest which you would get, in the international market. And that is why the the rating by Moody from stable to negative is a cause of concern, because it is going to impact our all the sectors. So any sector which goes to borrow, and if we are going to raise funds, if you raise funds from the international market through a GDR or an ADR, you will end up paying a higher rate of interest than if your rating was a little more stable. Now, the point is, we were already having a high percentage of NPA, and we do understand that the problem of NPA is not a new problem. But the important thing is, how do we get out of this? I'm sure we would have all read about the number of, many relaxations which have been given by a central bank. In fact, a number of relaxations like, you could delay your payments till June, or this whole thing about the insolvency and bankruptcy court for some time. They will keep all this at bay, or the fact that for the SME sector there is a complete strain on the profitability. So RBI has given a lot of relaxations. The concern here? The concern here is that all these relaxations would end by June. End by June, and we are still in the present scenario wherein not much has changed. Then how are we going to come out of this situation? And that is where banks will need to play a very proactive role, because the various sectors are already under stress. The cash flow is already under strain, and more so for the SME sector. And if you're going to press them for the repayments, it's going to be a little a different and a sad situation for them. The point is, it's a very catch-22 situation. How much of relaxation do you give, and when do you withdraw all these relaxations? So if you look at the slide, so I'm trying to go a little more in terms of slides so that we are on the same page. It's important, as I said, to understand that there is an insolvency code. There is, the whole issue of bad loans, and how we help the, our various sectors, who are under this problem. Now, those are important concerns. There will be some planning from the bank side, and we'll try and help you understand what should be the course of action for the banks, given this scenario of bad loans, given the fact that, the relaxations are only up to a period. Let me just mention here, after the global financial crisis, there was a lot of learning for our banks. Some of you who have a little knowledge about the banking sector would know that our banking sector is governed by the Basel norms. Now, these Basel norms, even if you do not know about them, please understand them as best banking practices. Now, these are best banking practices, and these are practices which have been given to us by the Basel. Now, Basel is talking about international best practices. RBI says if they are international best practices, we need to follow them. We need to adopt them. Now, after the global financial crisis, there were these norms which came up. And let me just mention two dimensions of these norms which talked about, the basic issue for our banking sector. And they said it's important for the banks to consider and ensure that they are always taking care of their solvency and leverage considerations. So you always have to look at, your solvency and the liquidity considerations. So what they said is that always ensure that the banks have enough liquidity and always ensure that they are solvent. Keeping that in perspective, a lot of rules like net stable funding ratio, liquidity coverage ratio were devised by the banks. Most of our banks were trying to come up to the standards. In fact, 2020 was a deadline which was, the RBI had set for the banks. But I'm sure this will have to be, postponed a little. The other thing which I would just very briefly touch on, because it concerns the very survival of the bank, is the capital adequacy norms. The capital adequacy norms also in terms of, the requirements in terms of the tier 1 and the tier 2 norms, which are, absolutely essential. And these are norms for all the banks. The good part is a lot of our banks, and remember, when I always talk of the banks, I really do not make a distinction between public sector banks and private sector banks or foreign banks. The important question is, are the banks efficient? So I find that unlike a normal perception which all of us have, that, oh, the private sector banks are good, the public sector banks. No, there's nothing like this. A lot of our public sector banks are also doing very well, and a lot of our private sector banks are not doing well. So the banking sector need to follow these norms, and a lot of banks, both public and private, were coming up to the standards which were the best international practices. Now, the banking structure, we know a little about the banking structure. How do we relate the two? How do we relate the business disruptions and those caused by pandemic? So now what we are going to talk about is, in any organization, in any business, there will, in the normal course, be business disruptions. Remember the floods of Bangkok completely disrupted a lot of industries. Or if there is a natural disaster like an earthquake or a Katrina, they are disruptions. But let us understand the difference between business disruptions that are caused by natural human-made or technology or operational failures and those caused by pandemics. In fact, all organizations will need to build in the pandemic part also, in their, I would say, in their, in the kind of a business planning. Now, what is the difference between the two? We're going to talk about this, in fact, in one of the next slide, probably. I've tried to give you the difference. The whole idea is that a business disruption is different from a pandemic disruption. And they are different in terms of the nature, in terms of the severity, in terms of the duration, and as a result of which, our responses have to be also different. So the question in front of all corporates will be, how do you manage business disruptions during a pandemic? In fact, as is being said, and also I would say learned by a lot of organizations, is, can we build in the extreme kind of disruptions which are caused by pandemic events into our business disruptions, or into our existing management activities. What are companies doing to incorporate pandemic planning into existing management activities? This is going to be an important question for all to answer. And remember, I started off by saying that many times there are questions to which we do not have the answers. And we are presently living in a scenario where questions are N and the answers are. When I was doing a lot of research on, the pandemic, and we generally keep reading a lot of newspapers and we read a lot of articles which keep coming and a lot of webinars also. There was a very interesting word which came up and which said creative pandemic. I'd really like to understand what is this creative pandemic. You know, uh, the good part is that, in this entire scenario where everything is so skewed and everything makes us only sad, there is a word which is creative. And the word creative used with pandemic means, oh, there is some solution. There is something which we can look forward. And I would say that, a creative pandemic is something like, how do you exploit the present situation to the full? Or, how do you use the present scenario to reposition and rethink? It says opportunity, or let me put it as a cliche line. A crisis is an opportunity to rethink and reposition ourselves. In fact, we are all so involved in a routine life that, a crisis jolts us out of the blue and it forces us to rethink and reposition. And this is what the global financial crisis of 2010 had done. Precisely, it gave a jolt to but the difference was that the 2010 global financial crisis did not have a human angle, and it did not have the kind of impact the present crisis has. But yes, we also learned a lot after the global financial crisis, and a lot of these learnings are also coming very handy now, because during the global financial crisis a lot was said about how B schools train their leaders, and they said there is one thing which is lacking in our leaders. We don't teach our leaders, or we don't teach our young leaders, let me put it like this, scenario plan. We only give them a straight jacket solution. No, let us give them scenario planning. Worst case scenario, best case scenario, or the present scenario. Now, this is something which will also help us in finding a solution to the present crisis we are in. So, a creative pandemic is, a word which has come up from the present situation, which says that use this opportunity to reposition, rethink. In fact, honestly, if you see, all of us, we have learned a lot during this pandemic. Work from home. Now, this is a new culture. It was always there in some corporates. Online teaching. New methods of online teaching, all of us have learned. Or how to, make the environment more clean. So the pollution levels have gone down. So, we are also, in fact, for a lot of organizations, I was hearing for one organization, for one meeting, in fact, I was talking to a friend and they say, for a lot of meetings, we used to spend X amount. And now it's practically free because everybody is, just logging in from their own home. Now, the point is, it's not about saving or cost. It's about innovative thinking. And these innovations help us to reach the next level. And it also helps us to exploit our potential to the maximum. And that is what the word creative pandemic should mean. And that is where we need to find a solution which is both, acceptable, and which is both not something, which disturbs us. So let us look at this pandemic for all organizations in a very, very positive manner. So our suggestion would be companies need to incorporate the pandemic planning considerations into, and so I would really want you to read these 2 points, which says into existing resilience management activities, provide a comprehensive response and to provide continuity for their most critical products and services. And additionally, companies should consider establishing pandemic-specific policies and procedures, capabilities for employees, communications, telecommuting, and personal family leave to minimize disruptions. It's important to think that how best can we use our responses to find a great solution to the present crisis we are in. Now, having said that, remember we said it's good for organizations to understand the difference in the two, the two kind of disruptions, business disruptions and pandemic. I mean, see, a business disruption is localized, whereas a pandemic related is systemic. Systemic is like it's something which impacts all over the world. So, the example we used to use for systemic after the global financial crisis was what will be the impact if one bank fails? There's a rippling kind of an impact. There's an impact which says one bank fails, what happens to the other banks? So like I was reading in an article which says if an NBFC fails, which is not so important, yes, there will be ripples, but nothing like if a bank were to fail. Now, those are things which we need to look at. So a pandemic-related disruption is systemic, and systemic means everybody gets impacted. Then it's about the whole velocity. The pandemic-related spreads rapidly, the way the present COVID virus is spreading. Whereas the business disruptions are a little more isolated, which means a little more related to that region only. Though, I would really like to differ here because, something like, when it was the Bangkok floods, what happened? The Honda factory was submerged in water. Now, if let us say, automobile manufacturing units were getting parts from Bangkok, their production would stop. So that was another learning at that point. The point was spread your risk. So if I'm going to buy a product, I'm in a business and I need, this product, which is very necessary for my unit, then I need to ensure that I'm not only buying from one source, my business has to spread the risk by buying it from a few sources. The duration of a business disruption is generally shorter. So remember, all these are relative distinctions, whereas a pandemic related is extended. And we are completely feeling this. In fact, we've never had a scenario like this in the last many, many, many years. Workforce, business disruption would be a temporary shortage. And this is something we are also going to feel it in India, that the workforce is going to, be an important area of concern in the coming months. So with the entire labor moving out, where are we going to get the labor for the kind of work which we need? So a pandemic related is always, the shortage of workforce, labor extends for a very long time. Then in terms of the other, distinction in terms of how do we get out of this situation? In a pandemic related, you need complete and high coordination. So it's not that I insulate my country. I need to ensure that other countries are also not, in this kind of scenario, as we have witnessed it ourselves. And whereas in the business disruption, it's mainly localized. So it's about your own country. Now, what does this lead to? The point is, we understand the difference. We understand. See, now the whole idea is not listing out the difference. Please remember, it's not about just listing out 1, 2, 3, 4, 5, 6, 7, 8. No, it's about how each of these will help me find a solution. How each of these will help us find a solution as we move along. So whatever solutions we propose, I'm saying propose, you can't give any definite solution here. So whatever solution we propose has to be in the backdrop of these differences, because we need to understand these differences, how each of these will impact my solution as I move along. And if, they are going to be a smooth ride, I need to adopt. So it is in this context, please remember, these differences. Now, this is something which I've emphasized earlier also, and I would again repeat, we need to move, and there are no two opinions about it, from business continuity to crisis management. Let me also just emphasize here for a minute that after the global financial crisis, there was so much of focus on enterprise risk management, ERM. So risk management is not a new word, but enterprise risk management came out to be a new word. And, if you look at prior to 2014, no company had a risk management policy in place. And what I mean is a formal risk. And now all companies need to put a risk management policy on their website also. And let me just give you one point of distinction between risk management and enterprise. When you say risk management for any organization, you are thinking about risk in silos. What it means is production risk is separate from finance, is separate from human resource, is separate from supply chain. But if I think about enterprise risk management, it's about joining all the risks together. So I'm not looking at individual risks. I'm combining all the risks and putting them all together in one cube. That's how they explain the enterprise risk management. And this enterprise risk management has really become important in the last 3 or 4 years. And, if you look at the Companies Act, see the Companies Act, we used to always refer to the Companies Act of 1956. We have the Companies Act of 2013 now. There were amendments, there were changes, but the whole act has changed now. So we have a new set of rules and regulations. So that is precisely what I would like to emphasize here: shift from business continuity to crisis management. Now, coming to the solutions, because I do want to leave a little time for your questions also. And I would really appreciate if we, leave about at least 10-15 minutes for questions. So please keep noting your questions and we'll come back to, so at one go, we'll answer all the questions. Whatever concerns or whatever issues which you would like to, maybe I would like to hear your perspective also. What do you think should be the solution? And again, let me say, solution is not a very right. I'm just proposing alternatives. It is being said that banks need to consider a range of alternatives, a range of scenarios to tackle COVID-19 and how this will impact their clients, financials, and their own operations. Now, there are 3 scenarios. Remember, as I said, questions for which we don't have all the answers. And, the fact that even our lockdown is getting extended means that we are also not very sure when this thing will end. And, the solutions being proposed are learn to live with it. It is in that context, these 3 scenarios are being proposed. What are these 3 scenarios? 1, worst is over in 2 or 3 months. Worst is over in 6 months. And 1 year, we are still in an ongoing pandemic situation. And The virus is still spreading and we are in a heightened state of anxiety, which is triggering a global recession. So these are, so I'd really want that we are somewhere between the first one only. So we have already had nearly 2 months, let's say maybe another month, and we should be partially or at least 70-80% getting out of this scenario. You know, that is what I meant. Remember when I said, what kind of a curve would the pandemic be? Would it be U-shaped? Would it be V-shaped? We prefer a V-shape because, okay, we have bottomed out and now we are getting back to business as usual. Remember, I also said, what will be the new normal? The new normal will be a bumpy ride. So it cannot be a straight line, and that is what I meant. It cannot be a straight line. And you know, there is one other point I would like to emphasize here. You know, why it cannot be a straight line? It cannot be a straight line because economies are connected. There is a complete global integration. I can't live in my own world. Everything is connected. So, you know, if you have a company, let's say, it's not manufacturing, it has no offices abroad. It's only manufacturing for domestic, you know, suppliers. It says, how am I concerned with what's happening abroad? No, of course you have to, because there could be a substitute, there could be a better product, there could be something related to what you're manufacturing. So the fact is, whether you are into domestic or foreign operations, we are all interconnected in today's scenario. So these are the scenarios, and these three scenarios are what we will need to consider. Remember I said, for any scenario, for any situation, any crisis, you can't have a straight jacket answer. So it's important for banks or other corporates also to plan as per the alternatives. The situation is unique, so we need to have out of the box kind of solution. Depending on the period, we have to, you know, work out solutions which take care of the three scenarios. So if one doesn't work, then the second works and the third works. So, you know, the way it is being said, and I'll also mention this later, have short-term solutions, but have a long-term perspective. I think that is also what summarizes this. A short-term solution, but with a long-term perspective. Now, obviously, yes, you can definitely ask me which of the scenario is most likely. Not really sure. But as I said, I really want the first scenario. In fact, all of us would say, wish, let's have the first scenario, which looks a little unlikely, but I'm hoping that it's the second scenario. I'm sure we're going to get out of it. And positive thinking does a lot. So let's all have a very, very positive outlook and do our, you know, our bit with the government. So, as I just said, what is our recommendation? Consider all such scenarios, but plan accordingly. And as I said, focus on short-term solutions, but keep a long-term perspective. Now, here again, you know, this was, this was from one of the reports of Accenture. You know, they did a lot of study, and their entire research was not only on Indian banks; it was a little more global kind of a study which they did. So, when I was reading through that study, they said that to get out of this situation, banks should focus on short-term impacts in 4 key areas of retail and commercial. You know, it is said that retail and commercial banking is the very backbone. And if we are able to take care of this retail and commercial banking, I think we would have done a lot of work and we would have achieved a lot of, we would go a lot way forward here. So the first area should be credit. Credit management is about NPAs, you know. So credit management is how do you manage the cash flows in the coming months. And remember, there will be a lot of strains, Depending on the kind of business you are considering, you should keep that in mind in, in planning the cash flows. So the point is, if we make our policies very stringent, we may just lose out on the cash flows which we might get in the next 2 or 3 months. A lot of small sales sector has suffered the most. They have had practically no revenues. If this is so, then how do you force them to, so if they've taken a loan, how do you tell them, okay, return the loans or pay up the EMIs? But I think that is where there'll be a lot of innovative thinking. There'll be a lot of human aspects. See, again, I'm emphasizing and coming back to that. Whatever solution you propose, please remember that this crisis has a human perspective. It's first about saving the human life, and then it is about anything else. So if it is about saving the human life, then this should be the topmost priority when the banks plan out their solution. Okay. For the regular salaried staff, it will be a little probably a little easy because, but yes, in the long term, you never know, the layoffs will increase. So what you need to ensure is that the non-performing loans do not rise, and please build in those, those buffers as we would say. Okay. And there's another suggestion here. Uh, please remember to have a lot of, or I would just put it in 2 words, display empathy to the various, to your various clients, to the various people from who have borrowed, to your consumers. That will go a long way in maintaining the relationship, because the kind of responses you give them today, they'll remember that for a long time in future. Okay. What should be the second? The second alternative is, which banks need to be prepared, is that there will be a revenue compression. By revenue, it is your net interest margin and net interest income. The NIM and the NII, both of them will be impacted. In fact, it will compress. If it is going to compress, then what should be the solution? See, it's important also to remember that if there are some sectors which are badly impacted by the crisis, there are some sectors which have gained also. So, you need to do that planning accordingly. For example, the consumption pattern of people will change. Please look at that. How can I include that into my planning? There'll be a lot of data security. People will be at home, so home entertainment section will go up. So, I'm not going into the details, but the point is, each sector will respond differently. But yes, from the bank's perspective, your NIMs will go down. But yes, then I'm sure you have a mixed portfolio. You have a mixed bag. Please take that into account and accordingly plan your NII. Yes, the stock market is, is a little sad that the, index is fluctuating. So we need to also look at these aspects, when we are looking at the NIM and the NII. The third will be your customer service and advice provision. So what will be the preferences of the customer? The important thing here is that all CEOs are telling their customers, minimize the contact. Use our ATMs, use the digitization, and we're going to help you wherever there are issues. So minimize in-person interaction and stay at home, and we'll help you with the various applications we have. So banks need to improve these services, ensure, as I said, there is enough cash in the ATMs. But, if a lot of us are doing online transactions, we need only one kind of assurance, that our data is safe, and our money is safe. So please ramp up your cyber security and the anti-fraud teams. This will go a long way in ensuring that the in-person contact gets reduced and all of us move as much as possible to online and digital transaction. Then the last factor which was emphasized was about cost control and innovation. The fact is, whatever we may say, the profit before tax is going to lose. So, there's a term which I was reading somewhere which says profit before tax after COVID. Now it's a reality, yes. Now, what has been the kind of impact of COVID? And it is going to reduce our profit before tax. What are the various risks? My revenue is going to compress. Oh, I'm sure these are dimensions which we will need to look. Yes, the cost control dimensions are an absolute necessity, and we will have to go into these dimensions also. So, as I said, the line was again a takeaway line from this session. Have short-term goals, but think long-term. So, banks should act quickly, but yes, resist the natural impulse to think short-term. Please don't think of only short-term solution. You are there for a long time. This will also pass. So remember that this is a very, very different scenario we are in. It needs a lot of patience. It needs patience from all of us. But please solve this issue with an eye on the future. Keep your long-term goals and long-term perspectives, and then find a solution. Let me go to the last segment before I leave some time for the question answer sessions. Have you heard of this? A bank selling bad loans? This is a reality. A bank can sell bad loans. This is through the process of securitization. Asset reconstruction companies. So, the whole process by which banks hive off their loans to a separate entity. And this process of securitization, not only creates money in the banking system, but also makes the balance sheet of a bank look very attractive. Very attractive. Now, securitization as a concept was very important till the whole global financial crisis happened. Till the global financial crisis, it was like a great concept, and everybody said, no, it's something we need to be adapting, we need to be following. But the whole global financial crisis, they said, they blamed the subprime and they blamed a lot of other factors, but securitization also got a bad. After 2013-14, securitization is back. Now, this gives us and leads us to another new concept, which is known as the concept of a bad bank. Have you heard of this concept? This concept has been there in the banking sector for a very, very long time. In fact, if you read up a lot of literature, it's been there for the last 10 years. But it was never given the kind of importance. In fact, everybody found the concept itself very vague, very absurd also, I should say. But now, scenario where because see, remember, our banks were already stressed. I'm sure we would know the kind of events we had undergone with a lot of banks facing the heat. And now with this kind of crisis, it puts a further strain to the loans of the banking sector and further on the non-performing assets. Now, please remember, bad loans are purely toxic, toxic means something which is really bad and which needs to be removed. So toxic is harmful. It's like poison. But the whole concept of a bad bank was pitched to the government by the IBA, the Indian Bankers Association, once again on May 7, 2020. They have brought it back. And they are, putting it in a new perspective. They are putting it in a new way. The idea is, how do we improve the working of a bank? It's important to remember here the backdrop. The backdrop is Moody downgrading the banks. By Moody's, I mean it could be Standard & Poor or any other agency which is downgrading our banks. Now, if this is so, how do we ensure that the balance sheet of our bank looks acceptable, looks neat, looks clean, looks good? Now, see, the ultimate purpose, which all of us also have, is that the bank has to be financially viable. Now, please remember, all these, when we say a scenario planning for a bank, or a bank has to do A, or a bank has to do B, remember, a bank can only help the economy if they are themselves financially stable. If the bank is not financially stable, then how are they going to help any sector? How will they be lending loans? So the banks have to be financially stable. So if you have to look at this whole, this whole scenario we are in, if you have to look at the whole COVID scenario, one of the important aims would be to make the banks viable, to make the banks solid, to remove all toxic things from the bank's balance sheet. So what do you do? How do we explain the concept of a bad bank? To help us understand, please remember that a lot of countries have used the model. And again, let me emphasize, our banks are following international best banking practice. So there's nothing, in fact, in terms of rules and regulations, we are perfect. Now, this model has been followed in other countries also. So the bottom line of the concept is that we have to improve the asset quality. And how do we get over the rotten assets and only look at the good assets of the bank? Let me also emphasize one more point here. Let's say a bank has n number, let's say 10% bad assets. What is the business of a bank? The business of a bank is banking. The business of a bank is lending. The business of a bank is to, borrow and lend. It's not recovery. So the banking officials are also not tuned to, okay, I have to run after X, I have to run after Y, I have to always, say, okay, how do I recover A loan or B loan? No, that's not their core business. Okay, all of us are trained to do that. But the core business of a bank is to do banking business, and it is with this background that the whole concept of a bad bank has been set. Next 2 or 3 slides, I'll explain it together because it talks about a bad bank. So, I'll explain the 2 or 3 concepts which are involved in the working of a bank. So let me give you the objectives and then I'll explain the procedure. So as I just said, the objective of a bad bank will be to clean up the balance sheet. Okay? How do you clean up? By hiving off the NPA. Part of it or total? That is what has to be decided by the bank. You maximize the value of the bad loans through focused retention, which means if my 10 crore of loans are bad, I'm sure you understand this doesn't mean that entire 10 crore is bad. I'm sure there will be some collateral. Even if there's not some collateral, there'll be, bank would not have given a 10 crore loan without a collateral. And if they have given a collateral, then I have the collateral backing. So please remember that if we put NPAs as X amount, the entire loan is not bad. It just needs attention and needs a haircut. How much of haircut is an important question in the, in the working of a bank. Insulate the management from that. Obviously, because as I said, the core area of a bank is banking. So, we're just dividing into two. We're putting the good loans here and the bad loans here, so that the bad loans is the responsibility of A and the good loans is the responsibility. And if the balance sheet is clean, what happens? You rebuild the trust of the investors. If you want, I'll come back to this slide, but let me go to the next slide to help you understand how it works. So how a bad bank can help? You ease the burden of stressed assets on the books of Indian lenders. And once you have eliminated the impossible, what remains, no matter how difficult, must be solved. So let me explain you this. Now, you know what they say? What IBA says here is that we will need to move the NPA or the bad loan to somebody else's books. How do you do that? And where do you move? So the important point here is we are going to sell this bad loan to someone else. The important thing here would be the process of selling the bank and who's going to buy the bank. So there are 2 points here. The bank has shifted the burden of the bad loan to somebody else. The modalities of this has to be worked. And the question here would be, who's going to buy this and how is going to? Now, I'm sure we have heard of a company called asset reconstruction. So if we are not aware of the word, assume there is a company to which, and remember, these are companies which have been created only for the purpose of buying of these loans. So there is a special company known as the asset reconstruction. In fact, we also call it special purpose vehicle, SPV, or special investment vehicle, SIV also. But here the term which is used is ARC, asset reconstruction. Who will own these companies? Now, this will be owned, the asset reconstruction company will be owned by a group that includes government, private investors, and the banks themselves. So, which means the bank will also have a pie in this. Now, the whole issue here is banks or the government is not looking at a profit here. They are saying we need to clean up the system, and this will be a standalone institution. And you're trying to just fix up this problem. Okay. No, so just let me go back to the blank slide. Now, the point is that this bad loan is being transferred with the backing of the government. And because it is being transferred with the backing of the government, the bankers will not be opposed to selling the asset. The only issue which the bankers may have is the head. So if the loan is for, let's say, as I said, 10 crore, it will be sold to the asset reconstruction company for 8 or 9 or 8.5 or 7. Bankers need not be, a little concerned about this, because since the government is involved, since this is a whole setup which has the government backing, I'm sure there will, be the modalities, as I said, would be later. The point is that this is a solution which is being proposed to take care of the problem of stressed assets in the books of the Indian lenders, so that they clean up the balance sheets, insulate them, and help improve their profitability. But remember, this is just a solution. This is just an alternative, not a complete solution. So I hope you have understood the the concept of a bad bank and to just take you to the model as is being proposed by McKinsey. So McKinsey has outlined 4 basic models for bad banks in 2000. They had outlined it way back in 2009. So as I said, the concept is not absolutely new. The on-balance sheet guarantee, which means the bank is going to give a guarantee. So the bank says, you give a protection as part of its portfolio against losses. An SPV or an SPV or a SPE, wherein the bank transfers its bad assets to another organization, which means what I just said. So you have a special purpose vehicle or an asset reconstruction company, where the loan is transferred. So the idea is it's a bank A and there is an asset reconstruction. Bank A transfers 100 crore of his bad loans to Bank B for, let us say, and Bank B in return gives it, let's say, 80 crore. The idea is now the bank can concentrate on its business and this asset reconstruction company then will only be to the business of recovery. Remember, the concept, as I said, of asset reconstruction company is not new. And, it's a concept which really works. The third is a more transparent internal restructuring in which the bank creates a separate unit to hold the bank. So this is simply like you don't have a separate entity like an ARC, but I just divide my portfolio and keep it separate. Or a bad bank spin-off wherein the bank creates a new independent bank to hold the bad assets, fully isolating the original entity from the specific. See, the whole purpose of a bad bank is to create a specific entity or a part of the bad bank which takes care of this problem of the bad banks. There are a sizable amount, so it's about 75,000 crores of stressed assets that are the bad loans, and a part of this, they say would be a part of the non-performing assets. In the Indian scenario, non-performing assets, stressed assets have been a big issue for a long time, and the banking structure, the central bank, and the other policymakers have been, trying to work out various solutions as to how to take care of these bad loans. But please, and all of us understand that bad loans is not a problem to stress assets. It's only finding a via media. Okay, so bad loans, they are a symptom, and the bad banks, the bad banks is only trying to deal with bad loans, and bad loans are a symptom and not the disease per se. Okay, so let me close this session, then I'll throw open to the questions if there are any. That the evolving COVID situation is complex. It's in fact very complex. There has to be coordinated response by the banking sector, and it is important to see how the sector and the economy as a whole weather this storm, handle the storm, answer the questions, propose the solutions which would help all of us to move away forward. So that is all from my side. Welcome if there are any inputs or any other clarifications or any issues to be discussed.
Thank you, ma'am. There are some questions. So if you permit me, I'll just take those questions.
Sure.
One of the question is, do you think there will be a possibility that banks are now going to ask for risk measurement from an enterprise who wants loan in a situation like COVID-19 if this type of situation comes again?
So what you're saying is, do you think banks will ask for a
risk measurement?
Definitely will ask for a risk. In fact, let me tell you, banks will ask for a risk measurement. And, remember I mentioned something of an enterprise risk management. What is going to happen is banks and a lot of other institutions are looking at the complete portfolio of the loan in terms of the complete risk which it will generate. So they will definitely ask for risk management in terms of scenario. What if scenario? Good situation, bad situation, when would you repay, or other things. So definitely this is going to be a way forward, which would be the learning from the present COVID situation. Definitely yes. Definitely yes.
Ma'am, there's another question. In post-COVID period, will the bank mergers help revive the economy?
See, it's always a very difficult thing to say whether the merger will be good or bad. Let me answer this question by, whatever I've read a little about the research, wherein pre-merger and post-merger. So whenever we have looked at the post-merger, and I'm now talking only of the banking scenario, and a lot of times the research says, and I'm saying the research says that post-mergers, banks have not been able to live up to the expectations for which, the merger was thought of. So I would say the mergers would happen, but not because of COVID. In fact, if even before COVID, a lot of mergers have taken place, but that is because of capital adequacy and other Basel norms, which the banking sector had to be compliant by 2020. So it could be economies of scale or it could be diseconomies of scale. It would be how each bank goes ahead with the merger. But yes, if you talk about the capital adequacy and the other norms, mergers will be a way.
There is another question, ma'am. During this pandemic, which one is better, SPE, ARC, or bad bank spin-off in the Indian case?
No. See, you said bad banks?
Bad bank spin-off.
No. Spin-off is a scenario. SPV and bad banks are specific entities created to help banks move out of this scenario of stressed assets. So when I say bad bank, a bad bank will support the good banks and they will help the banks remain financially viable by transferring a part of their loans to a special purpose vehicle. It could be a special purpose vehicle or it could be an ARC. The names could be different. As I said, I could use special purpose vehicle or SIV, or I could use ARC. I could use any of these terms. It depends on how, I structure the bad bank. But remember, the idea is that we are removing these assets from the balance sheet of a bank to clean up the balance sheet. That was the purpose of the bank. But having said that, remember the concept of bad bank is still being gone, still going backward and forward. So we'll try to arrive at, do we or do we not? Yes, if you read up the Mace news, the International Bankers, the Indian Bankers Association has proposed this to the government. Yeah. Other question, Dipti?
Yes, ma'am. RBI is taking care of liquidity in the economy by giving more money to the banks by changing main ratios. Do you think it is going to change the bearish scenario in the economy?
I would not think so. I would not think so because we have enough liquidity in the banking structure. In fact, there is enough liquidity. There is a lot of question about its use, about how appropriately we are using. So I don't think this is going to really impact the structure. I really do not think so.
Another is, ma'am, after COVID, banks should focus first on product services or customer experience, whether design thinking helps to select priority or not.
You're talking of customer service and you're talking of product.
Right.
Yeah. Do you think the two are not related? Both of them are related. And I appreciate this question, good question, because you're talking of design thinking. Design thinking is something which says, how do I do the same thing differently? And design thinking is about how to solve the user's problems to improve customer experience. So I would say product is a part of this. So if the product adds value to the business, that is also what we are wanting, and it helps me increase my customer experience, then also it is a good part. Let me also add one more point here. Design thinking is a non-linear experience. It's not a linear experience. It's a non-linear experience. If it is a non-linear experience, product, customer will all go together. I may just focus a lot more on the customer, and sometimes I may focus on the product. So depending on what is my area of interest, but it's a non-linear experience, so the two go together. Any other question?
Ma'am, what will be effect on bond yield of the stimulus packages?
What will be the of what?
Bond yield.
Effect of bond yield on stimulus packages? What did you say?
Yes. And this is the question.
The question looks a little incomplete because what
Yes.
is God? Yeah, it's not a complete question, but the effect should be positive only because see the point is with the rates going down and with our rating going down, there is a complete strain on the bond yields. So that's what I could say. The impact should be positive only, but the question looks a little incomplete. So maybe I'm not able to appreciate what the question is. Yeah. What else?
Will coronavirus become a more important factor in economic slowdown in 2020 than the so-called trade wars?
I think it looks like it will become a more important factor than the trade war. The trade war will only come after we solve this problem. No? So the trade war, interlinkages, globalized economy all comes secondary. The coronavirus is like, a topmost problem. In fact, I don't know. I was looking at a video which is circulating. This is from a TV series in the US in 2003, where there is a small clipping which talks about the coronavirus. I mean, honestly, I was taken aback. I don't know whether it's a spoof or whatever it is, but they were talking about the coronavirus and the kind of impact it will have on the entire human and mankind. So I think more than trade war, coronavirus is going to impact because the COVID situation is about human. We save human life and everything else is secondary. I think everything else comes later, but the kind of impact coronavirus is going to have is going to be a topmost priority. Any other question?
I think these are the all questions that we had for today, ma'am.
Okay. So, Ipti, I'm so happy to answer the questions, and let me thank you and the participants for their patient, listening. I really wish we could have seen the participant. Uh, so I'm just saying, somebody also asked a question. Somebody says my question is not answered.
Yes, I am just looking for that only. Any other panelist who can see that, because there is something wrong with my screen all of a sudden.
Please help me.
Somebody says that my question is unanswered. If some other panelist can see that question.
I was also reading that on my screen.
Mr. Anirvina, Mr. or Miss Anirvina is the person.
Okay.
So, Amit, if you can unmute him and ask him to raise the question.
Let me see who are the people who want to chat.
His name is Anirvina.
Okay.
You can unmute and give him or her the opportunity.
Just a minute. AMIR.
I mean, if we find the question, fine.
I'm not able to locate this. What is the spelling, ma'am? Can you please repeat?
ANIR.
AMIR is not. I'm not able to find him in email
N for
identity.
New York. N for New York.
Acha, ANIR. Just a minute.
VINNA.
Now unmuted him. Mr. Anil Meena, you can ask the question.
Hello, good afternoon to all.
Afternoon.
Ma'am, don't you think monetary policy is again is getting failed during recession times? Only fiscal policy is the need of the hour, and till then, all the banks are going to keep the surplus funds with the RBI to earn that little interest and fearing non-performing assets.
Absolutely, you're right, because that's where the stimulus is needed in terms of the fiscal policy. Yes, and in today's context, you're absolutely right. The money could be with the bank, with RBI only. On the monetary policy, yes, needs to be relooked, but the fiscal policy is the only one which is helping us move ahead. You're right there. You're right there. Right.
Thank you, ma'am. Thank you.
Any other question?
I think Deepthi, you can conclude.
Yeah. Thank you, ma'am. Thank you so much for this enriching experience. It was a lovely session, and thank you. You were so gracious to take all the questions till the end. And
Absolutely, and thank you, Neena, and thank you, Dipti, and thank you all of you for having me here. It helped me also to, look at various dimensions of COVID. I think, one also read up, and this forced us to read up and, learn a lot about this situation. And thank you for the great initiative you all have taken. Thank you.
Thank you, ma'am. Very comprehensive and very informative presentation.
Thank you so much, Neena. Thank you.
Take care. Be safe.
Hello. Okay, thank you. You too. Thank you. Need to
Thank you,
meet
ma'am.
after COVID.
thank you all the participants for all the lovely questions that we had. Over to you, Amit sir.
So all the participants will be starting with the next session at around 2 o'clock. So shortly I'll be mailing you the links for attending. And till then, enjoy your lunch and come back at 2 o'clock. Thank you.
Thank you.
Thank you, ma'am. Thank you.
Thank you. Bye-bye. Thank you.
Bye.